Let's welcome on board the management of JSW Steel. We have with us Seshagiri Rao, the MD and joint MD and Group CFO, joining in on the show right now. Mr. Rao, great to have you on the show. I'm just going through your earnings and clearly the impact of high-cost inventory iron ore in the second quarter, which you had guided for. Would you think that lower prices of iron ore would get impacted in the third quarter?
Iron ore prices, as you know, globally got corrected downwards, which peaked close to $230 plus per ton. It came down to 120 and even below, which amounts to almost 50% correction in the iron ore price globally. Whereas in India, the quarter which we ended, the price correction is very marginal. Even if I consider the corrections that have been made in October, is not in line with what globally is happening as regards to iron ore. So therefore, the benefit of lower iron ore cost, which was globally happened, the Indian steel company is still suffering because of very high iron ore cost to the industry. Those prices are not coming down. I think those costs still the industry is bearing.
Sure. But Mr. Rao, coking coal prices have gone up sharply, clearly. Will that negate the benefit of iron ore prices coming down?
No, that is what I was trying to explain. In this quarter, globally, iron ore prices have come down because of the policies followed by China, where their demand has come down, their production has come down. So the demand for iron ore has come down from China. The immediate impact was a steep fall in global iron ore prices, which did not get reflected in Indian iron ore prices. So therefore, Indian steel industry in the last quarter still continues to suffer high iron ore price. Over and above that, the energy shortages, which arose in the last quarter, that also pushed up the energy-related commodity prices. You take thermal coal, or you take coking coal, or you take oil, any of these materials, the prices have gone up. That's why the coking coal price went up from $120, $130 to $400 per ton. So therefore, what industry has suffered is a severe cost pressure. High iron ore prices in India and globally very high coking coal prices. Over and above, the other costs also have gone up, either power cost or ferroalloy cost. These costs have gone up. That's why there was a severe cost pressure for the Indian steel industry in the last quarter.
Give us a sense of EBITDA. Where do you see going forward? Because obviously there is a change in the EBITDA profitability if I look at the year-on-year comparison. But in generally, where is the EBITDA margin headed?
The point is the margin per ton, if I look at it sequentially in the last quarter, there was a drop because of the reasons which I just explained. The cost pressure was very, very severe. And at the same time, the second quarter, generally due to monsoon, Indian demand is sluggish. That is why a lot of exports were to be made in the last quarter. So both together, if I really analyze the last quarter results, there was a pressure on the EBITDA per ton. But in absolute amount wise, we have made more EBITDA, 10,417 crore EBITDA in the last quarter, compared to the sequential quarter of 10,274 crores. So there is an absolute number-wise amount of EBITDA was higher because of the volumes and the product mix. Going forward, if you ask me what is required to be done, the coking coal prices have gone up so much that it is very difficult for steel companies to absorb. So this high cost of coking coal plus other input costs, plus the benefit of iron ore not coming to the steel sector, I think we may also have to think about maybe some energy surcharge type of passing it on this extra cost to the customers. As and when the prices come down, it is so volatile, the market conditions are concerned, customers will benefit. If prices go up further, as has happened for the last few weeks, then we may have to pass it on to the customers. That is how we are looking at it as far as the overall price scenario and the coking coal price scenario is concerned.
So then do you see price keep on going higher? Because yes, input pressure has gone higher, but on the other side, it has to be viability at the consumers end to accept this price hike. So are you in a position to increase prices more?
No, the demand for steel, I think you have to look at region wise instead of looking at globally. You must have seen the recent short range outlook that has been given by WSA. They said in the calendar year 2021, the steel demand will grow by 4.5%. So if you just break up that 4.5%, it is minus 1% in China, and the rest of the world will grow over 11.5%. That is the kind of outlook which has been given. So region-wise, the dynamics are different. In China, starting from July, month after month, the demand has come down. In the month of July, in China, because of the policies which they have followed, the demand has fallen by 13%. In the month of August, the demand has fallen by 18%. In the month of September, the demand has fallen by 23%. So that is why the demand in China is falling, but the rest of the world demand is reasonably strong. At the same time, in Indian scenario, if you look at it, last quarter, as I mentioned, it is a subdued demand. But now we are seeing an uptick in the overall pickup in the Indian steel overall demand is concerned. Either you take solar appliances or GIGL type of products, or even construction activity, residential construction activity, they're all picking up. So we expect the second half will be much better than in the first half.
Rao, just want to get an update from you on what we've seen in the steel sector. Now, all the brokerage firms, including the global ones like JP Morgan, are saying that maybe margins have peaked. So during this good run, what we've also seen are that Indian domestic companies pay back their debt smartly. What is the health of the Indian steel companies? And after what we've seen, margins peaking, will we see more investments, another capex cycle boom?
No, Indian steel industry from that point of view is very competitive. That is why if you see we are exporting large quantities of steel to the global markets. So Indian industry, steel industry has been identified as one of the champion industries, not only to meet the growing domestic demand, but also to meet the export demand that is being vacated by other countries like China or Russia. So therefore, there is a huge amount of scope for Indian steel industry to create capacities in India to leverage this opportunity to export and also to meet the domestic demand. That is why if you see Indian steel companies, particularly integrated steel plants, company after company is announcing plans for increasing the capacity. JSW Steel is in the forefront. We are running a capex program of 48,000 crores. I'm very happy to share with you the first time the largest 5 million ton brownfield expansion at a time has been commissioned in India. It is the first in the world, 5 in India. First time an 8 million ton, 5 million ton expansion getting completed. It is the largest blast furnace and also the melt shop with 350 tons capacity. This has been commissioned on 19th October 2021. So what I can tell you is there will be a huge amount of volume growth that can also come in from expansion of our Dolvi unit by 5 million ton. That is why companies really wanted to take this opportunity of a very favorable cycle. And we are very, very confident that the demand will pick up further in India and also globally because of the energy transition type investments that would stimulate the steel demand.
Now, Mr. Rao, we're talking for the first time after the energy crisis that we actually saw China shutting off production, power production to so many of its industries, including steel. We had seen that. Just the way the coal prices have also shot up back home because of the rains, the torrential rains. There was a crisis and, fears that we have a Black Diwali with most power plants running out of coal or red flagging, only 24 hours of stock left. What has been the impact of all of that on the steel sector?
As far as the energy shortages are concerned, either in terms of power availability or any of the other energy related material not available, it will have an impact definitely. But in my view, it is not a very, very long-term problem. It can be addressed. It is a matter of time. It will get addressed. Similarly, the auto sector, which is suffering because of this chip shortage, even it is a matter of few months, that also will get corrected. So from that point of view, these are all only transitory problems which every one of us is going through, but it is very temporary in my view.
Let's talk about the current cycle then. Where do you think the steel cycle is? Because it's a cycle, sir. We may talk about right now steel companies enjoying a great pricing power. but ultimately every cycle will follow a pattern. Where are we in terms of this steel cycle?
No, we are seeing definitely a lot of positives as far as this cycle is concerned. It is structurally, there are a lot of changes which has happened post-COVID. COVID could be one of the triggers for these changes. One is energy transition, which we have been talking about, and the focus of the government to spend more and more on the infrastructure is also one of the biggest drivers for the steel demand. So even in the first 6 months of this year, we have consumed 49 million ton of steel as against 35 million ton in the previous year. So there is almost 14, 15 million ton of more steel we have consumed in the first 6 months of the year. It is going to accelerate further in the next 6 months. So we will be close to 110 million tons of steel consumption in this financial year, as against 94 million ton in the previous year. So therefore, companies are spending on technology to ensure that we will be producing less carbon intensive steel and also green steel. A lot of efforts are being taken by the company, particularly JSW Steel. If you take it, we have committed that we will reduce carbon emissions to 1.95 by 2030. And based on that commitment, we could also raise $500 million sustainability linked bonds, first time globally from a steel industry. So that is how we could really raise money based on our commitment to reduce the carbon emissions.
All right, Mr. Rao, really appreciate your time. Glad you could join us. Let's take a break with the news that so far markets are holding on.